Alright, hi guys, welcome back to PKFX YouTube trading channel. So this will be a quick video in terms of trade entry as well as trade updates. So I'm currently in three trades. One has been going on for quite some time. I took profit on one trade and the other two I just recently entered. So without further ado, I'll go with the first trade that I'm gonna talk about, which is pretty much the AUDJPY. So as per explained previously, this particular trade, they had a massive dump and it was news related dump. So we entered around here at the daily area of interest, right at the round psychological number of 111.500 because we were expecting for a strong week out, as this was market news related or news driven move, and it has been playing out pretty well ever since then. As you can see, the market closed out its 4-hour candle closure right above here. So the entire thing was a week. The entry point was actually a fantastic entry point, with the stop loss, which was given like about 65 pips, placed below this area of interest where I expected a good amount of support to come in. And I would say it was pretty much a sniper shot based on what the market was doing at that point of time. If I go to the daily candlestick and I zoom in, this was the entry point. And I was expecting the daily EMA at that point of time to hold, and the market was already dumping close to the daily EMA, about 280, close to 300 pips, which was very unusual. So I set the entry point right below there at the round psychological number at the daily support zone, where I was expecting some sort of week out to bounce purely because of the market position, and that's exactly what it did. Now, I decided to hold on to this trade, and just want to explain that when the market was pretty much done dumping and the market started its recovery motion, I noticed that the 4-hour lower low was here and the lower high was here, which makes this entire movement as pretty much nothing that's happening right now. As long as the market doesn't break below this 4-hour lower low, it is not making a new low. And as long as the market doesn't break above this 4-hour higher low, it doesn't make a new higher high. Technically, the market at a daily, at a 4-hour, and every other candlestick below that time period is pretty much bearish. It's pretty much in a sell direction, but I'm on buy direction. So why did I do that? Is because if I go to the weekly, I see that the weekly is actually a very clean uptrend, and the market did not have any good pullback, and when it did, the market continued to rally upwards. When it did, the market continued to rally upwards. So this week, which I didn't expect to be such a strong week, right, was a good amount of liquidity grab, or a good amount of a lot of people leverage getting flashed out before the market, in my expectation, would continue to the up direction. So I'm technically trading pro trend. It's not a counter trend trade. It's technically a pro trend trade on a weekly perspective. And I decided to hold this particular trade for the long term. Not to say for the long term, but easily like about a week or more, because the swap for AUDJPY pair to buy was positive. So I was technically not losing overnight swap fees as well. In fact, I was actually gaining a little bit of swap fees, or it's neutral, it's zero. I don't make any money at all. So in that kind of instances, it's okay to hold on to the trade unless you have very high negative swap rates, and every other day that you continue to hold a particular trade, it's incurring like a negative amount of deduction in the form of swap. Then you're taking more losses than what you're risking for. So this is one of the main reasons in why I decided to hold on to the trade. And if I go down to the 30 minutes candlestick, let me just show what I'm trying to explain over here. Okay, so technically this is the lower low, and over here, all the way up here, is the lower high. So anything that is happening thereafter, the market, as long as it's not breaking the 30 minutes, right, as long as it's not breaking this particular point or this particular point, technically the market is not really doing anything. It's just ranging, right? And the market is still sell even at the 30 minutes. Even if I go to the 15 minutes candle, because of the severe dumping of the news event, which was right over here, right, technically this was the lowermost point and this was the highest point, and everything else is ranging. So even at a 15 minutes candlestick, the market is still ranging. Now, I'm expecting the market to rally upwards, and the moment the market breaks this point, or I don't use the 15 minutes much, I would go for the 30 minutes candlestick. So as long as the market is below this, I'm still pretty much neutral on this trade. But the moment the market comes back above this area, this particular area, let me just draw a line like this, boom, okay, let me mark it as a rate. Okay, so as long as the market has not broken above this particular rate line, the market is technically still sell at all the lower time frame level except for the weekly. So the daily, the 4 hour, the 2 hour, the 1 hour, the 30 minutes is all a sell. And I clearly understood this. And I'm expecting the market, okay, to rally upwards. Therefore, this is exactly what I was expecting. I was expecting the market to break this area, change this resistance, turn it into a support, come back again and reconfirm this as a support before continuing the rally upwards. Now, this is what I predicted when the market was here. Was I right about this direction? For now, it's still neutral, but the immediate reaction, to be fair, was actually dumping. I was expecting the market to go up, but it was dumping. One good thing that I've done is I've already moved my stop loss all the way up here, right? And I decided that if this trade I'm going to hold, I'm going to let the winner run. If at all it reverses back towards me, at least I close it in a small profit, right? So in this case, it was pretty much not even a 1-to-1. It was like a 1 to 0.8. So technically, I risked 1 to gain 0.8. It is not an ideal risk to reward, but at least if the market reverses back on me, I'm in profits and I'm done, and I can utilize the capital into the next trade, right? I could have easily made it into a 1-to-1, but for me, it doesn't make sense to set your stop loss above this 4-hour lower low, because the market can come all the way close to here, close me out of the trade and still go up, and the market is technically still considered ranging between this low point and this high point. So there is no point in me setting the stop loss above here. But if I set the stop loss below here, if the market comes back down, which it almost did over here, if I were to zoom in, it almost came over here just like 12 hours ago, like in the afternoon for me. It came all the way down here and I thought it's going to close me out, right? It almost came up to here, right? But it didn't close below here. It continued to rally upwards. If my stop loss was above here, I would have been stopped out and the market continued to rally in my direction. So this is what I realized might happen, and I maintained my stop loss below here, because only when the 4-hour candlestick closes below here, below this 4-hour line, making a new lower low, now that will be my new lower low, and wherever this candlestick is, that will be my new lower high, and that change in motion will make me know that the direction is now going downwards further, right? As long as this is not invalidated, for me, this is purely still news-driven thing, and there is still a potential chance for the market to continue to rally upwards and eventually continue in my direction. This trade over here that I took a loss, this was the initial trade. This is what I was expecting the market to do. But unfortunately, it was taken away by the dump due to the news. I expect the market to still come back and still continue the momentum. Now, what am I risking in the table right now? I could choose to take profit this very moment. I'm literally at a 1 to 3 risk to reward and in profits. Like this very moment, I could choose to close this trade and it's a fantastic like jackpot 1 to 3 risk to reward trade. But I gotta be fair, my target for this particular trade was for it to come up here, retest below, changing the resistance into a support and continue the trend upwards. This is what I wanted. So I need to stick to my own game plan, right? So the moment this candle closed above this 4-hour EMA over here, this gives me this kind of gave me a renewed confidence that there is a chance for the market to continue rally upwards. And remember the 30 minutes candle that I said, the red line that has to be broken. I'm expecting the market to continue to rally upwards and close above here. Now, the moment a 30 minutes candlestick closes above here, now it makes sense to start trailing the 30 minutes candlestick and eventually move the stop loss higher. In fact, I could even move the stop loss all the way to 1 to 3 to secure these profits, right? But yeah, just to be very fair, this is a winning trade. I could choose to close it right now, but I'm going to stick to my game plan to continue to hold it purely because I'm expecting AUDJPY to continue the rally upwards. I'm going with the weekly pro trend and the buy swap is positive. So that's AUDJPY. So far it has been a jackpot trade. Let's see what it's going to do in the next 1 to 2 days. Hopefully it will go in my direction. Now the next trade, USDCAD. This was the trade that I previously closed. So as you can see over here, it was a fantastic 1 to 2. I closed it down here, 1 to 2 risk to reward, and it went straight to TP. And this was another winning trade, and I've updated the journal accordingly. This was the trade, USDCAD. It was a winning trade. AUDJPY, this one is currently ongoing, winning trade. Even if it reverses on me and closes out on a stop loss, it's still a winning trade. Now USDCHF is the new trade that I just entered. So let me just break it down over here. Okay, so USDCHF, basically the weekly is a sell, right? If I look over here, the weekly is a sell. Strong amount of structure is coming over here, and the candlesticks have been forming a strong amount of structure over here as well. So I expect the market to dump and retest this structure point, and since the overall trend has been downwards on the weekly, so technically it's a pro trend trade. On the daily candlesticks, this is technically a buy, right? Over here this is the higher high and this is the higher low. However, this particular engulfing sell candle and a pullback over here coming back to retest this daily zone, making it into a resistance. Plus, if I were to zoom in, there is a round psychological number of 0.78500, and the daily EMA also coming in from the above acting as a resistance. This strong daily engulfing candlestick that has engulfed 1, 2, 3, 4, 5, almost 6 candles indicates to me that the structure is changing, right? And this pullback and this rejection and then opening and going down is pretty much indicating to me that there is a high chance the market is going to continue to dump downwards, right? That is on the daily. So daily bias is buy, but the engulfing candle giving me a sell direction. And the 4 hour, technically this is the higher high and this is the higher low, right? So 4 hour is still a buy. But what made me to enter was because the 4 hour EMA also acting as a resistance, right? So I saw a nice 1 to 2, plus minus 1 to 2.5 risk to reward. And my entry reason was the 2 hour, the 1 hour and the 2 hour candle, but mainly the 2 hour. If I were to zoom in over here, I saw this beautiful thing that formed over here. The market went to this area, which was my resistance zone, and perfectly rejected, tried back again, and again perfectly rejected again. So I saw that, hey, this area might just be the rejection point. Maybe it's never going to come around this area, which I initially intended it to come over here and then dump. Probably it's never going to come over here, right? But I wanted some sort of a confirmation, and I waited for the 2 hour candle. If you see, this is the structure of the 2 hour, this is the highest point, and if I follow up over here, this is the lowest point. So this is the structure point. I wanted this point to be broken by the 2 hour candlestick, and it did over here. And the moment it did over here, the 2 hour candlestick shifted from buy to sell. So this was my confirmation to enter, and then I had a reasonable pullback over here, and hence I got another entry which was perfectly wicked in as well, another sniper shot over here, and then the market continued to dump downwards. So I would say this was also another beautiful trade where I have the 2 hour EMA also acting as a support. This trade I just opened like a few hours ago, and currently it's still ongoing. Technically it's not in a big profit, so what, it's just literally buffering right over there. For me, I'd be confident when it dumps below this 4 hour, breaking the 4 hour buy into a 4 hour sell. Now I'll be super confident that it's going to go and hit my TP. But yeah, pretty much USDCHF, that's the trade that I've entered, currently in profits. And then GBPUSD. Now USDCHF, if it's a sell, I'm expecting GBPUSD to be a buy, because the USD now is in the opposite side, right? And it has been a buy trade. I just entered as well. So far it's in, I would say, small losses. I don't know if this area is going to hold or what, but this particular trade had reasonable amount of confluences for me. So I've updated the journal. In fact, this was better than the previous trade that is currently on profits. It was a 110% confluence for my strategy. So I have to follow taking the trades according to the strategy and risk accordingly. But what I didn't do over here, I was not like super confident that this trade is gonna hit a win, because the last time I had 110% confluences and I took a 1% risk when I doubled down, it ended up as a loss as well. So I wanted to play easy. I already have a good trade that's going on well that I've already risked 1%. So this one I go back to risking only 0.5%, and I've updated the trade as well. Accordingly, I've journaled it down as well. Now, this particular trade, the weekly is bullish. So if I go to the weekly candlestick, right now, I understand that the weekly is pretty much at the highest point. Now, this could be the reason it fails, right? The weekly could literally just come back over here to retest this area of interest instead of this area of interest before pumping up. But because the weekly is bullish and the daily, right, it broke this particular triangle pattern in a very strong momentum and has been creating a bullish flag pattern. And this breakout over here, if I zoom in, the daily, right, this is the higher high, this is the higher low. It broke above this zone and then it came back to retest. And to be fair, it kind of closed below and it opened above and it started moving above, right? So I entered with the expectation that it is retesting. Let me just bring it over here. If you can see clearly, this is the previous structure point. It perfectly retested the previous structure point. So my expectation is for it to hold and then continue to rally upwards. Now, can it happen? Will it happen? Market is pretty much 50-50. But I do have the 4 hour as well. This is the higher high. This is the higher low in my favor, which is bullish. The 4 hour EMA coming in as support as well. So I'm expecting the market to hold this area and hopefully ranges a little bit here before continuing the upward direction. I wanted the market to come back down here and go back up here. The market did that, but it went slightly below and then came back above the 4 hour EMA and reconfirmed to me that, hey, this area is holding. That's why I entered with a stop loss below this zone. 50 pips stop loss, I believe it's sufficient enough, but anything can happen to the trade. I pretty much journaled it accordingly. I mentioned the weekly, daily, and the 4 hour is a buy. The 1 hour and the 2 hour gave me the shift of structure, right? So if I go back to the 1 hour and the 2 hour, it was a clear shift of structure and then it pulled back, right? And the 2 hour also gave me a clear shift of structure. In fact, it closed above the EMA and then it made the pullback. Right now, it's below the EMA, right? I was expecting this area to hold. Well, we got to see, right? Only when it breaks below this point over here, it invalidates the trade. And at that point of time, it pretty much already broke below the area of interest. So high chances it may just hit the stop loss. But I'm expecting this area to hold. I've given 50 pips. Hopefully it doesn't close me out overnight swap and etc. But yeah, that's pretty much the trade. So AUDJPY going on for now. This was my winning trade, but I chose to risk this entire profits. If I lose this, it's entirely on me and I accept the losses. It will be a very small profit. But if I'm right and it breaks above here and continues the trend upwards, at that point of time, I can move my stop loss to a 1 to 3 and that would be a fantastic trade and I can let the winner run. USDCAD, as explained, I've already taken the profits. I was actually looking for a new buy, but so far I've not entered yet. USDCHF currently in a sell, currently in a very small profits, and GBPUSD currently in a very small losses. GBPUSD, it's a buy. So that's pretty much the trade update. Thank you so much for your time and good luck, guys. Thank you.